Hi, my name is Brendan Kaplan, and this is my second presentation for FinTech 534 at Duke University, fall 2023. This presentation is titled Introduction to Refinitiv and TWS, and is basically like a little hello world type experiment for interacting with the TWS client. So let's just dive right in. So talking about asset classes, I chose to trade in options and equities because I wanted to balance something new and unfamiliar with something that was more familiar. I've worked on pricing models for options in the past, but never actually traded any options myself. Thought it would be a good experience to sort of step outside my comfort zone and trade some options without necessarily fully understanding how that process was going to play out. And doing all this while applying the material we covered in class. Uh, I chose equities as my other asset class because equities were something that I had more experience with doing and had done with my own money in the past. And so there was a lot less uncertainty, at least involved in the decision making in trading equities. And so I was basically balancing my anxiety of the unknown with something that I was more familiar with. So these are the trades that I conducted over the course of this project. First, I bought 5 Peloton put options with a $6 strike price and a 9/15/2023 expiry date, and 5 Zoom put options with a $72 strike price and a 9/15/2023 expiry date. After that, I purchased 10 shares of Zoom outright. Next, I purchased 50 shares of Adobe and 80 shares of Apple. And then today I exercised all of the Peloton and Zoom put options in the money. Then I bought back the resulting short positions to close out the position fully. So here on the left, you can see my trade confirmation flex query as of today, 9/13/2023. And on the right is a screenshot from my TWS client of my portfolio tab, also as of today, 9/13/2023. My strategy was predominantly fundamental. I looked through Refinitiv for corporate events, news, and analyst recommendations. I'd heard in my marketing class that the pandemic era bull stocks like Zoom and Peloton were down significantly since their pandemic highs, so I decided to look into that. From Refinitiv, I learned that Peloton had recently released a very poor earnings report. Analysts were either recommending to hold the stock or sell the stock. I also believed Zoom to be undervalued, but thought that that price would continue to fall or remain undervalued in the short term. I noticed that Apple's stock price took a pretty significant dip over the last week, but I saw this as an opportunity to buy in at a lower price because I generally believe that the stock will continue to grow at least into the next year. From Refinitiv, I also learned that Adobe was expected to release an earnings report later this week and that analysts seem generally bullish on it. I did also perform some trend analysis in helping to determine which strike price I should choose for my put options, which I bought, as well as weighing the probabilities for potential profit. Today, when I was exercising the put options, I was uncertain whether it'd be more profitable to exercise my options in the money or sell the contracts outright. Because it was close to the expiry date, I thought that their time value would be relatively low and it might just be safer to exercise the options in the money. I also didn't want to take the bet of selling the put option contracts because I didn't necessarily believe that Zoom or Peloton stock would be equal or higher to the strike price come Friday. When I first started this, I said, honestly, I don't expect to make a return. I think I actually might lose a bit of money because, I don't know, I guess I wasn't very confident. And I didn't really believe I knew what I was doing. Still don't necessarily believe I know what I was doing. However, as of today, before class, I did make a small return. I decided not to close my long positions in Apple and Adobe, but had I done that, my current net liquidity value is up to 1,02,223.06 compared to the original 1 million that we started with. So we have a 0.15% return. Some risks in my strategy were that it relied more heavily on fundamental analysis than technical analysis, perhaps too heavily. I didn't actually calculate any payoff diagrams. And after the fact, I realized that I didn't execute standard textbook option strategies such as the iron condor, but sort of just felt it out. I took on higher risks doing this, as well as buying options in the first place when I had no experience with doing so. I wanted to attempt to hedge that risk by taking a long position in Zoom in case my put options were going to expire out of the money. Then I would still just have paid the premium and taken the profit from Zoom stock increasing. I also attempted to mitigate risk by taking 2 long positions in equities I felt confident had some growth potential, at least in the short term. Overall, this was a good learning experience, and thank you for listening to my presentation.